Good morning, everyone. Good morning, YouTube. Good morning, traders. Hope everyone's having an amazing start to the week. It is Monday after yesterday's Super Bowl. I didn't watch it. I'm in Europe, so I don't really care about it. But hope everyone had a great time watching it and is ready for the market this week because this week we have a decent bit of very important news that's coming out on Tuesday. We have the CPI data that's coming out. That CPI data is expected to be the month over month print is slightly hotter than the prior month. The prior month negative 0.1%, and this month, the month over month, is expected, or the prior reading, I should say, month over month was negative 0.1%. And this reading, a month over month, is expected at 0.5%. Now, will the CPI come out hotter than that with the year over year expected at 6.2%? That's going to be the main topic of the week. That's what everyone is waiting for. It happens to be right on Valentine's Day, the key inflation data. And January consumer prices are forecasted to climb, like I said, 0.5% month over month for the first time in 3 months. And the annual rate, like I said, 6.2% year over year, continuing its decline since the start of that move to the downside since mid 2022. So if that persists, because the prior reading for the year over year number was 6.5%, if this persists and you get a 6.2% year over year, right, the decline is continuing, and we're probably going to see some bullishness realistically in the market. A lot of people are still calling for this new bull market that has shaped up here, but I feel like there's still a few things to kind of glance over before we get this quote unquote soft landing that would be in the mix if this is a new bull market realistically. So keep an eye on core rate as well, which strips out the volatile energy and food price and is closely watched by the Fed policymakers for its inputs on housing and other key parts of the economy. So inflation, swaps, bonds, options suggest that CPI could come in hotter than expected. This is what a lot of analysts are saying, naturally, adding that the January CPI report could be a massive shock to the stock market. So others also believe that the market is not living in fantasy land following the big rally in January. And while the Fed is likely to continue raising rates and keeping them higher for much longer than expected, considering a lot of Fed members are still looking for above 5% into the end of the year before there's any talk about a slowdown in rate hikes or even a cut in rate hikes realistically. So this is fairly positive for the longer term, and investors are best served to remain fully allocated to equities in this sense, right? So has the bottom come in? Not necessarily understood just yet, but a lot of these dips are probably going to be bought, and I feel like on the longer term perspective, there is value in investments. So we'll see, right? Naturally, if we get a hotter print and we start to see more of macro downside, you are probably going to see new lows, but are they going to be much, much lower than what we've seen recently? We'll have to find out, right? You won't know until you know. And in recent weeks, Fed Chair Powell has stressed that there is still a long road ahead to deal with inflation, rather than an instant on and off switch that would result in an easier investing decisions. So the disinflationary process, the process of getting inflation down, has begun, and it's begun in good sectors, which is about a quarter of the economy, he said, in the recent Economic Club of Washington, D.C. But it has a long way to go, and these are the very early stages. The reality is we're going to react to the data. So if we continue to get, for example, strong labor market reports or higher inflation reports, it may well be the case that we have to raise rates more than is already priced in. So that's somewhat of the bearish narrative. You can see the Fed isn't very strict on its policy decision just yet, but realistically, the soft landing and a move into the S&P to 4,200 again by the end of this month is a lower probability of actually seeing it lower. So soft landing is still, I think, the lowest probability out of the possible different landings that we have here based on the quantitative tightening and these rate hike decisions. So in terms of other news, right, there are naturally the news about unidentified objects over the U.S. and Canada, and a mix with that with China as well over the past few weeks, right? Not going to get too into that. I haven't really been following it that much. I just know that there has been that sphere of the world. So I want to take a look at some individual names, right? Like between Google and Microsoft, there is a fight that's ongoing for AI supremacy, and AI seems like it's turning into one of those next generation bubbles realistically. Now, obviously there is some merit to it, and depending on the companies, I think there's some validity there, but a lot of things are flowing in the AI space yet again. So just as we saw with NFTs and whatnot, but we'll see how that kind of shapes up. I'm just watching Google and Microsoft's reaction to this AI fight, this AI battle, and Google had a pretty strong downside into last week, and right now it's holding a pretty strong level at 94. We'll see how that shapes up at 95.45. There's a resistance, but I want to see if they can hold the 94, which is the bottom of a larger distribution. While Microsoft, right, it had a pretty strong gap to the upside and held out to the upside pretty well before into the end of the week we had more of a slowdown. But when it comes down to the S&P 500 futures, I want to take a look at what's going on with this market, because tomorrow morning is going to be the CPI report. Keep that in mind. So at 8:30, we're going to get the CPI report that comes out tomorrow, and that is going to give us an indication of what the next swing on the medium term in this market is going to be realistically. I think there's going to be a continued trend based off of what happens with the CPI tomorrow. So right now, as it stands, we managed to slightly break above the 41.05 region, which is the start of the bottom of a distribution block. Into the morning session, right? We rejected around 41.15 or so, and we're coming back into that distribution block at 41.05, right? And 4100. 4100 is going to be a very pivotal level. It marked a strong resistance on Friday into the close, and I'm going to be watching that very carefully today. If we start slipping under 4100, I think that lower distribution that kind of extends down to 40.73 can be tested. I kind of want to see some more bulls kind of shape up, because 41.05, 4100 is a huge pivotal area. I think there's going to be a decent amount of attempted buy in that region. I'm going to watch that area for sure. I think that's like the last chance for these bulls to really kind of take this today into what could be a range to a slight bullish move right before CPI. I think a lot of these dips do try to get bought into the CPI. We'll see how that shapes up. So just keep an eye on around 4100, 4105 region, and then above 4117. And the top of that distribution block that starts at 4117 is going to be 4133. This is a medium-term distribution block. So I want to see how these buyers kind of shape up and hold this level. So far, holding pretty well. They're going to have to really take this today on the S&P 500, or sorry, on the SPY. 408 is a massive gamma pivot ledge where it's going to fight bulls versus bears. So the bears are going to want to take it below that. The bulls are going to want to take it above that. And that area responds well to about 4105-ish, plus or minus a few points on the futures. So that region has to hold again. 4100 to 4105 is the area I'm going to be watching to see if we can get a rebid from there and try to see some of this upside today. So with that being said, I want to wrap this up here with you guys. I hope you have an amazing trading session. Happy Monday. And tomorrow, CPI report, we're going to be trading it live with our trading room in the morning. I'm at TRADEPRO Academy, and then we're going to do our YouTube update. So catch us there. I hope everyone has an amazing trading day. Take it slower today. I expect slower movement, more of a range, more of balance, as a lot of people are risk off into the CPI. I don't think they're going to be very active in today's session in terms of opening that many new positions before we get that massive report that could shape up the next move in the overall market. So thank you all. I hope you guys enjoyed that, and I'll see you guys tomorrow.